Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is April 29th, 2016, and this is the Daily Report for gold and silver. What an incredible day and showing for the precious metals complex as a whole. Commodities as a whole, very, very strong this week, finishing up with an explosive rally to the upside. Gold trading up $30 on the day, $12.9640. It looks like that's where we'll get settlement on COMEX, up 30, low $12.67, high $12.99. We closed about $3 off the high, but the high was $1 off that elusive $1,300 per ounce. Of course, we do have a long position in gold, so we profited quite nicely today. We also have a long position in silver. Silver trading higher on the day. Now, silver closed up about 1.75%. Gold actually outperformed it, but nonetheless, a very nice showing. 1782 puts it up about 30 cents on the day. The low 1752 and the high 1795. So traders, here we are, 29th day of April, end of the trading week, end of the trading month, going out with a tremendous bang. We're taking a look at a gold chart standard candlestick format with our current short-term Elliott wave count. The Elliott wave count that we are looking at in red is our sub count, or this would be our minor count right in here, and then behind the sub count is the black. And the way that we have been looking at this market in terms of a genuine rally and correction, which I absolutely believe is over right now, we absolutely bottomed when this market traded to about 1050. This, of course, the end of last year, beginning of this year. From there, we went into an extended rally with our wave one, a 38% retracement for wave two, a 161% extension of one, 261% extension of one to give us that wave three. From there, we went into really a compression triangle for wave four. And as you can see, we had that narrowing of range. We had a series of lower highs, although right in here it got a little fuzzy, but we definitely had a series of higher lows, and that concluded for right here at about 1231, which took us to wave five, and this concluded our rally and also concluded, as I said, our minor count of one. Now, from one, we go into a corrective wave two, and traders that have been with me for a while, originally I had thought we were looking at something like this, an A, a B, and a C. And that was all fine and good, although the market maintained this kind of sideways trading action with a highly compressed range. So as we saw really price data unfold, in other words, as time went by, we could easily identify yet another compression triangle. And this compression triangle that we were looking at had a count roughly of the same 5 count and then a thrust. So the way you would number that is we hit our 1, and then from there we went A, B, C. We hit a D, and if you recall, this is actually where we initiated our long position on this breakout, and we put our stops, which are still right now sitting right below 1222. And if you recall, my rationale when we put this trade on was that if in fact the market did come down for one more leg and we were long this market under the belief that we'd get that break to the upside, we needed to have our stop genuinely below the compression triangle, which is right in here. So that's why our stop was sitting at 1222. And as a side note, we will be moving our stops up. Look for a special trade alert. And traders, if you haven't, go ahead and fill out the SMS text information with your phone number. And that way you'll get trade alerts not only via email, but you'll get the notification on your phone via a text message. So as I said, we put our stop under that point, and in hindsight, nothing could be further from the or closer to the truth, because we did get that leg down. And then over this last week, again, this is a daily chart, we got that thrust. The thrust is when we actually break above this line and then move, which takes us, meaning that takes us into a wave 3 on our count, and it also means we've completed our wave 2. which brings us really to what we like to call the big picture. And to do that, I've pulled up a weekly chart, and this weekly chart has our long-term Elliott wave count, which shows that we concluded a major fifth at our record top at 19.20 per ounce. We had a extended, protracted sell-off, a corrective wave, and that would be our wave A from 5. Let me compress this so you can see that. That would be our wave A right in here, and that completed, of course, on our intermediate 5 out of 5. And the way that you would count that 5 out of 5 is as follows. You simply would look at a 1, 2, 3, compression triangle for 4, compression triangle for 5. That completes our A, our 5, as well as our minor or subcount 5. We're now in, I believe, a B wave. And in that B wave, our subcount so far has shown us that we had our wave 1. That's the rally we just spoke about. And we just completed our wave 2. And as you can see, there's our compression triangle. And I believe in that mode, we are now looking at a wave 3. So the real question is, where could wave 3 take us to? And so traders, to forecast a possible conclusion of a third wave, if in fact that is what we're looking at, realize that wave 3 should never be the smallest of any of the impulse waves, but wave 1 was absolutely an extended wave. So what we've done is we've created a fib extension in which we have our starting point at 1050, our concluding point at 1288. We then take it down so that we begin that particular extension from the point of the bottom, and I've actually lowered it a little bit. A 61% extension takes us well above 1300 to about 1360, and just a one-on-one relationship. And the reason that I am really honing in on this 61% is because we had such an extended rally. But if we get an equal rally on wave 3 to wave 1, traders, we're looking at $1,450 gold. And so that seems a little bit out of place right now. So right now, what I am looking at is the potential for this market to move in terms of the extended rally to about 1360. Now, traders, that's not going to be straight up. My belief is it's not. In other words, what we'll probably see is, again, a subdivision of that into a series of 5 waves. It's kind of like Russian dolls. You can always subdivide these particular moves into their corresponding smaller subset, so to speak. So in terms of where I think we could go, my initial call, and I'm still going to stick with it, is we will see gold trade over 1300. However, the fact of the matter is it's currently trading at 1296. This weekly chart has not updated yet. So we're already at 1300, very, very close. So the question is, will we see it back off a little bit at the beginning of the week, a little bit of profit taking, and then move above that 1300, or will it steamroll? Well, that's something we'll have to see, and for that reason, we will send out a special trade alert raising our stop in gold. So we're also long silver right now. We haven't really taken a stab at silver for quite some time. I was not really happy with the performance that we saw through last year, as you can see, and then we hit these lows. At the same time that we hit the lows in gold at about 1050, we broke below $14 an ounce in silver. We also identified the fact that we absolutely had this rounded bottom, and from there, this market started to trade higher. Now, our position that we put on, I believe, is at 1736. Stops are below 17. They're at 1662, if I'm correct. And the rationale behind that, of course, was when we put this particular trade on, which was roughly in this area right here, we needed that stop to be below this particular retracement point. Now, we talked about this yesterday. I said that I don't see any issues breaking through the next resistance area at 50, which was 1759. If you recall, that's what we said yesterday. And our real mark, I believe, if we see gold continue to rally, they will run, I believe, in tandem. And our goal right now, our exit strategy, is to get out as close to 1850 as possible. So the Dow Jones Industrial Average did close off on the day, off on the week, and I believe a little bit on the month. But the interesting thing is, with the S&P and the Dow Jones Industrial Average, it really came off of those lows with a vengeance, so to speak, as we got into the last hour of trading. Now, Dow did close down 57 points, 17,773. But take a look at this low, 17,651. So about 120 points lower than this. So at the lows, the market was trading off about 170 points. So I believe a tremendous recovery within that market. Really, the same thing happened with the S&P. We're looking at the E-mini closing off about 11 points today at 2061.25. Take a look at the low. 2045. So it was down 15 points behind this particular close and low that we're seeing. It also came way off the lows. We'll tell you what we're thinking the equities markets could do next week as we take a look at our first S&P chart. You know, when you think about the rally that we have seen in U.S. equities markets, really beginning mid-February when we hit this double bottom right in here at about 1,800 on the Standard & Poor's, this is of course the E-mini, we've had this dynamic rally, we've had series of peaks and valleys, and we absolutely saw some real headwind coming into the market as the market broke above 2,100 on the S&P, which corresponds to, of course, 18,000 on the Dow. We pointed out the fact that on the last two occasions that we had this market trading at this price point, on both occasions, the market corrected, once fairly shallow and once very strong. In fact, this is what formed that W that you see in the market. And so it wouldn't surprise me to get kind of a mirror image. In other words, we've got the market here. I wouldn't be surprised to see the market trade back down to about 2,000 on the index. That would still be above your 200-day moving average and then bounce off. You would still be in a bull market, meaning you would still be in a scenario in which the market's moving higher. That would be a very acceptable correction. It actually would be a quite shallow correction because you're still looking at a 23% retracement as opposed to a 38 or 61% retracement, and that would almost give you your mirror image. I wouldn't be surprised to see the market unfold like that. So we'll take a look at the equities markets next week, but I wouldn't be surprised to see a little bit more downside. So traders, talk about a dramatic plunge today. A dollar index off about 0.75%, breaking through that critical area that we've identified at 94 on the dollar index. You can see that right here in this weekly chart. We'll take a look at a dollar chart. But traders, take a look at what the dollar has done. This is a daily chart. Dollar falling out of bed today, but trading under pressure for at least the last week. And if we take a big picture look at it, it has been really trading off since December of last year. But the key is we've pointed out the fact that I believe that we had a critical area here at 94. We broke solidly through that price point. So where in fact could the market go? Well, if you look, it's actually touched upon these lows that haven't been achieved since May of last year. So this is an area that we could look for some support, but tremendous downside move in the dollar today and this week. So although crude oil is in essence unchanged on the day, now that we've got the month coming to the end, consider what we've seen this month, about a 10% rise in terms of price of crude oil. This is a monthly chart. We'll just show you real quick. Take a look at this most recent month. Over the last couple of months, we have seen this market move tremendously to the upside off of those lows at about $26 per barrel. Traders, what a week we have seen. We've got a couple of extremely profitable trades. I'm excited about that. I'm excited about what we're going to see next week. As I've said throughout the show, maintain your current long position in gold, maintain your current long position in silver. We will send out a special trade alert Monday to raise our stops up. Have a great weekend. This has been Gary Wagner, wishing you as always good trading. We certainly saw that this week. We'll talk to you on Monday for another daily update and review. Bye-bye.